Marksman Capital presents.
Bearish breakout continuation patterns. Now, it sounds pretty common to see these patterns in the markets, and it's shown in some of the charts, and it is often a one-sided story. Now, why am I saying it's a one-sided story? Because this is used to perpetuate some kind of liquidity for the smart money. Now, now this is almost very common amongst retail traders. And if you're new in trading, or even new in investing, if you see these patterns that are presented over here, you know, it might seem very convincing to you. But here's only one side of the story that I'm telling you. And I've been telling this about a few parts, and this is actually the fourth parts. There are three parts I've done earlier in the video. You can search in my video library, and this is like the fourth that I'm doing this. And of course, before we go on, here's the disclaimer. And of course, here are some of the common patterns. Now, it may seem fancy to you, all right, but all you got to remember is that now all these names here, if you look at a bearish symmetrical triangle in a downtrend, like number one here, bearish symmetrical triangle, so it has to be like symmetrical on both sides. Looks technical, right? Bearish panel in a downtrend. So altogether, in all the technical patterns could be amounting to more than around 40 patterns. But in bearish breakout continuation pattern, all right, downtrend continuation pattern, it has around seven. No, not seven. Sorry, six. Well, we count that later. All right. Of course, it's more than six here, but here are common ones, and most people recognize this bear flag. All right, and well, rising wedge is not so common, but you still come into that rising pennant. Okay, you come into that. So now it all looks pretty simple right here, technical and simple. And bearish rectangle, this is also where most people come into. So ascending triangle in downtrend, yes, sometimes you do. And okay, bearish wedge in a downtrend, this is pretty rare, I would say, rare. And the same goes for diamond in a downtrend continuation, rare. Okay, diamond downtrend and continuation is like a symmetrical triangle on this part, all right, where it breaks out and continues to go down. Now, how common retail traders trade this? Now, I'm going to show you some example how they trade this. So now, minimum you need to have three waves, right? So that's the common guidelines that some of the gurus out there they are talking about. And in my early days, it seems that this is very convincing when the guru tells us that okay, uh, you need at least three waves. Now there are four waves here. So waves meaning that well, this is like one impulse wave, second impulse wave, all right, and then this is the third impulse wave. Okay, I've drawn a little bit more than that. So fourth impulse wave. So what you can see here, it's a pattern forming to actually, forming a diagonal resistance and a diagonal support. But most people will look at the support because now you can see bounces uh, of the support, one, two, and three, and then anticipating another one coming through to break out. Sometimes it breaks out at three. So there's like red candle right here, three, then immediately they sell, right? So this is where they sell. Now to smart money that attracts a lot of liquidity, right? Liquidity and it's time, if it's a strong fundamental stocks, you just have to be careful of this. All right. You might see different things happening. Now, I'm telling you one side of the story, all right? It's not gonna get you too clouded. And here is a candle with conviction. It starts to close below the trend line. And after that, this is where a lot of people, oh, okay, I'm gonna sell. All right, everybody's gonna sell. Retail traders, not everybody, all right? Retail traders are gonna sell, and they're taught to do that. So, and if it retraces up, all right, and then it gets another rejection downwards. Okay, this is also where they sell. People who wait for retracement, okay, seems like a very very logic thing to do. Wait for retracement for safety. If it's more safe, it is safer to short sell. You have a second confirmation. Sometimes this doesn't happen. All right. So how do they set up their risk reward? Often the thing that you hear from the market is always like the ones that I said earlier. Sorry for the color. The ones that I said earlier, 1 to 2 risk reward ratio. Okay, risk reward ratio. This is always practiced by most of common traders, and unconsciously they do not know. Short-term traders are actually traded. They provide liquidity to the smart money because these guys they come in with like a few hundred, a few thousand, a little bit here and there scattered, but they need all these people to group into one predictable pattern so that the smart money in billions that they need to accumulate in their portfolio. Smart money, they normally look at long-term patterns, or sorry, they invest into fundamentals long-term, right? Professional traders or professional investors. So now, okay, after they done the risk reward, okay, they've calculated, enter around here. So stop loss is around here, which is what seem to be protected by the diagonal trend line, right? So it's somewhere around here, stop loss. So say the account is 10,000 US 10,000, right? And probably they want to risk about five, okay, let's say 2% of the portfolio, and this is just 200 US dollars, and they're looking to gain, like 400, twice is 400, right? So 1R is the risk, then you get 2R as the profit target projections. So always calculate the risk first before you calculate the profit target. So ideally, this is what most traders look at and how common this looks like. So most people want it to seem this way, and of course, again, here's another pattern that is also common, and it's a 3 waves minimum around that. More than that, you could call it some names. Not too mechanical, all right? So again, 3 waves pattern. What you can see here is first wave is this one, right? This is the first wave. Then second wave, third wave, fourth wave, all right? So anticipating breakouts around this area. So now this is a very, very recognizable pattern, I would say. It's hard, it's hard to say that you can't recognize the pattern. I would say even my dog would recognize this. Now, okay, so now here's another thing. And if it breaks out, and Guru will say, oh, if it's half of the body, more than half of the candle body is out from the support, it's a great confirmation. Then they talk about volumes shooting upwards. Like, you have like low volume here, and suddenly you have like high volume. All right here, then it's a confirmation. And what they do, they sell. All right, this is where they sell. And then if there's a confirmation, second confirmation, okay, more people come sell. So those who put sell limit orders, they wait for this one. They might miss it, but this is what they expect. All right, so this is what they call a bearish flag formation. And just before I show you that was a bearish rising flag. So again, the same method used. All right, entry, stop loss 1R, and profit, 2R. All right, so this is 2R. Okay, pretty clear. It's not so much of a rocket science here. Okay, so some examples. Now, usually when the guru has taught you some of these methods, and they will say, hey, I'm going to show you some examples. Okay, the examples that work, all right? So how many examples that did not work? Nobody knows, right? Okay, so here goes, all right? So now identify the bear flag in the downtrend continuation. Now here in this chart, you can see very obvious this is the bear flag. Okay, so I think yeah, this is daily, all right, daily pattern. So now, like I said earlier, two ways, three ways, four ways, but this is really consolidated, all right, right here. And there's no even chance for you to say, if it breaks out like the candles here, confirmation, then you sell right here, right? So you see that's an earnings right here, and then suddenly it went down, gaps down, and you miss that. If you have a sell stop order, you might be selling somewhere around here, which is not favorable. You do not have like, or probably when your sell entry is here, then your profit targets here, you might never reach that. Okay, and then what really happened then? You can see there's another pattern right here. It's a rising wedge. Call it rising wedge. Right? How many weeks? Months? 4 months. This one took 1 month. Right? 4 months. November to February. Okay, then breaks out again. Okay, then this one you have some time to sell before it goes really downwards and volatile. Okay, that's one example. Bearish flat in a downtrend continuation. Oh, okay, I did highlight the second. Okay, here you have another one. Right after flush down. Okay, here's a downtrend. So pretty clear. And okay, ideally where I would like to sell, and here's a little bit secret that I'm leaking out. Ideally, I would like to sell at areas. If I see, okay, this is small candles, right? So after a breakout, wave down, I don't really chase it. But see, now it's flashing upwards, wave down a little bit, flashing upwards. So where I really want to sell, it's okay. So I just draw. Okay, here's like pretty common support right here. Sorry, not resistance, and I call this a false top. So I would like to sell something like this. False top, of what do you want to call it? False resistance. Right? Resistance. But this one, it did come back. You might have a sell limit order right here. Revisit those levels. This is where I like to sell. And after this bearish pin bar, then you see it waves down a little bit like 40-degree, you know, then a little bit 40-degree, it flashes up a lot. Okay, this is where I would like to sell, right? And of course, it depends whether it's strong or weak fundamentals. I don't really just look at technicals, you know. Technical is just an overlay to my fundamental analysis. It's just one part, all right? Not the entirety. Right? If you're just a pure day trader, yeah, okay. Technical analysis might be your forte, all right? So now, okay, where's another one? So when you see three waves forming, right? Three waves forming, it's not really that consistent. You see, we can see like big one, small one, then another one, then okay, it bam, there it goes out. This is okay. Yeah, remember this is a pandemic time. All right, so now there it is, big bearish candle right here. So this weekly candle. So it took like half a year, July, then all the way to March to form this. July to March, July 2019 to March 2020. So now see, and this is pretty fast. And if your risk reward is like, okay, so somewhere here, some people they like to put stop losses right up here, but of course it stretches out their profit target. All right, so if they tighten their stop loss, which is normally right around this area, if they sell around here, so the profit target would be here. So profit targets not always fixed to R. If you are really a true trader and you've traded for years or even decades, you know that 2R sometimes it's not that ideal. This is like common, this commonly told by people. And you find out one day, like if you trade thousands of trades, all right, I'm not saying just hundreds, thousands of trades, short term, long term, swing trades. months, days, minutes, you find out that 2R it's not really ideal, right? But sometimes if you really trade properly, okay, this is rare occasion. 5R, 4R, risk, I mean rewards, return. Okay, but not to go over that too much, but you can see somehow later, uh, I have these records. You can see some of my scoreboards on having to trade within half a year, hundreds of trades to make 180% gains. But you can see the R, the return ratios was not exactly fixed at 2R all the time. All right, 1.8, 1. So, okay, here's another one. Now I'm just training your eyes to see, okay, this one absolutely you have no time to confirm at all. It is weekly. Maybe if you go into daily, then you have some time. But okay, you see, this is not exactly even 3 waves. It's just 2, but it is indeed still qualifies as a flag, all right? But it's not, a fully qualified one. It's just a semi-qualified one, say. All right, then, okay. So rising wedge in the downtrend. And this is long and painful for those who like, like, okay, the longer you wait, they say the better the confirmation, right? And here's some confirmation. See, breaks out, gaps down, right? Zooming a little bit right here, see, gaps down, pretty nice, but there's some rejection right here, maybe because of this support. So then it tries to go upward, see a lot of rejection and it goes down. All right, there's a lot of commitment from the bears for this one. But if I would like to short, oops, where were we? If we were to short, then very often I will look at pattern, not just patterns, weak fundamentals, companies that has not been making money, and the interest rate cycle is just starting to go up for companies that don't make money and has a lot of debts. That if it forms like flush up patterns, okay, false top, bear traps, sorry, bull traps. I might not talk here. Then bull traps. Then I'll start looking into selling. Right, but selling is not very common for me. Most of the time I buy. Right. So yeah, Coca-Cola. Now this is what might happen to you. If you didn't take your profit margin, sorry, profit target. See, if you have sold in this candle, right? Zoom in a little bit. Now let's have a little bit of discussion. If you have sold into this confirmation candle right here, this candle, and then it comes back, you maybe you want to sell more. So now this is Coca-Cola, pretty strong fundamental stock, and this is where I could say false bottom or false support. All right, forced support. So temporary breakdown, or you can call it a bear trap. Then it waves up, then flushes down. You can see now. You see, it's taking out some stop losses. Then you can see some squeeze here. Then again, most people close out and then start to go down. So I'll zoom out a little bit. Then bam, it finally go down, but then it starts to recover pretty quickly. It's a strong fundamental stock. Look, you're looking at the Coca-Cola right here. But I don't really buy Coca-Cola. It's too slow for me. All right. I have some other stocks that this year I have. If I show you, I have. And by the way, it's Christmas. Uh, I have beaten the S&P by a far gap. Okay, I don't know. I don't know where to say the far gap, but there's a gap. So S&P is a purple line. Global Financial Markets is my Facebook. I would say Facebook website, and you can see that the S&P. Whoops. All right, S&P. It's this year from January to now, almost closing to December. Right, December. Right? Today's 25th. It's Christmas exactly. Right. So this is last Friday. So my portfolio is up 50% and S&P is only 24. But some people are happy with 34. Why I get 50% is because I choose the stocks which is less than you know It's actually less than 1% of the you know like 9,000 stocks listed in the US. So it's about 30 stocks that gives us the edge, gap to actually beat the S&P. So it's I would say yeah, maybe next year you get another positive one. So the stock market is always ready to go up in the long term. And so of course, if the market becomes bearish, my portfolio might underperform the S&P a little bit before it goes up. And you find that global financial markets, this website, sorry, it's not a website, it's a Facebook community. It's about 2,000 over people, 600. And usually what I post is that I also have written a book here, e-book. Well, most times I'll explain a little bit from time to time. It's just for micro learning, right? And time to time I do call out stocks, and you'll be able to see strong fundamental stocks working out. Okay, working out pretty properly. They play out the patterns pretty properly, and you can see that the stocks that I really buy, they actually I analyze them fundamentally. And let's say Fortinet, I did call out at December 9, right? December 9, which is here. So a few flash down. Cybersecurity company, which is now cyber hacks are really exponentially going upwards. Uh, Cyber hacking, right? I would say exponentially going upwards. And it's this is a company that rides on that wave, macro wave. Look, okay, let's go into Fortinet for a while. Okay. So after I've called out, you can see that, all right, so I've called out around here. So okay, here's a bullish flag for you, all right? Then I don't really buy at breakouts. I buy at, if this stock is very strong in fundamental, I start accumulating right at these areas. You can see a few of them. All right, you see, even if it breaks down, see, there's a flush down to shake out weak hands, then it starts with. Now it's again rallying, and which, yeah, okay, I call out around here. Today's Christmas, right? Yeah, December 9. Just a few weeks away. Now, whew, not to get too sidetracked. Then coming back to this bearish triangle downtrend continuation, I would say that you can see, like, it's pretty obvious that this pattern plays out pretty well. Again, three waves. Didn't mention this now. Three waves. Not exactly hitting the right model, but it's to me. So sometimes you need to train your eyes, right, to get used to these patterns, and you can see sometimes the support that I draw. And now a lot of traders will ask, Derek, why don't you draw something like this? Yeah, it could be a descending um, triangle in a downtrend. See, horizontal line here. Does it? But for me, it doesn't matter. All right. So yeah, it could be like this. Then you have confirmation. You can see that sometimes it works out pretty nice for you. Breaks the pin bar. There's a confirmation candle for you. All right. Bam. Okay, you see, there's not much time to retrace. You see, even back here. And the next candle is just, when, like, it's like this guy had a long constipation, right? Sorry, long constipation. I mean, a few months or half a year, and then finally it goes to the toilet, right? Then if okay, then it chooses to reverse. Now here's a pattern. Okay, you might have learned it earlier. This is a very high probability pattern. See, especially if you look in now strong fundamental stocks. If you see this pattern, and the stocks is really down like 50, 60% or 70%, but the revenues, the profit margin, the cash flow is going upwards, you know. And then you see this pattern and it's really down 60%. Well, like really like to buy. If it forms something like this, this is where I like to buy. And okay, that's a false bottom right here. Oops. Okay, zoom in a little bit, sidetrack a little bit right here. Okay, so now, okay, this is where I would like to buy. All right, so if it's a strong fundamental investment, I can catch falling knives, no problem, no stop losses. And this is a pattern where when it breaks out, then you have very strong confirmation going upwards. Now, which is exactly the stock that I'm looking at that has this? Now, let's sidetrack a little bit right here. We're learning, right? So PayPal is the one, right? So PayPal, has been like what 2 years down the road. Now it's forming a falling wedge in the downtrend. And it has been 84% downwards. So this is time. Oops, sorry, coughing lot. Just had COVID earlier. First time 3 years. Okay, so if it comes to around level 30, this is where I'm gonna buy. But of course, I have very conservative price targets depending on whether what's the season at that time if it breaks out, right? Okay, I don't really buy just breakouts just like that. I'll just wait for it to go lower. This line right here around level 50 US dollar per share. Right? Okay, here's how it goes. All right, sometimes it breaks out and it comes back strong. Boom, 90%, 90 degrees, sorry, 90-degree downwards. Comes back up. Where I like to buy is around here. Right? Okay, now that's another secret for you how I really take advantage of patterns. I'm not really always buying breakouts, but I do look at failed breakout patterns and fundamentals. Okay, and PayPal, I mean, I don't really invest in it because it doesn't really have. I mean, I would like Mastercard and Visa. They are the ones that have they are duopoly. They have wide economic moat. But PayPal, it's not globally diversified compared to Visa and Mastercard. So yeah, okay. You can see the margins are not very consistent. Cash flow, not consistent. Yeah, it always has consistent revenues. So yeah, it might attract some you know some buyers. So institution buyers now at 71%. But compared to like Mastercard, I would say, well, see, international market is about 16%. This is a very good sentiment. This is engineers like this. North America is about less than half, right? So it's more geographically diversified. It's making very consistent. Okay, although it did suffer a little bit from the pandemic, but but if you average out the line, it's still going upwards. Just average out the line, right? So this recovered, and it has more than 30% net margin, and it's pretty consistent cash flow. Visa card, Mastercard, they have the okay. So then I always sidetrack, right? So okay, so it's not always dependent on U.S. markets. See, this guy is also really consistent. It has 50% profit margin, right? So PayPal, nah, not my favorite. Okay, I mean, although it's like people know it, but you have other fintechs that are better than this. Let's see. I just want to look at. I'm for my curiosity. I just want to know whether it's really globally diversified. Okay. Well, it's still a lot dependent on US 58% the revenue stream. So, okay. But I live in Malaysia. It doesn't really, work well here. So maybe I don't have good experience on that. That's why I don't go for PayPal. But okay, back to this. Well, yeah, we see consistent patterns going on, right here. There's a squeeze, goes down. Well, like to short here. All right, flush ups. This one, wave down and flush ups. Okay, so much secret that I share it out to you. Then okay, so you can see the support that I draw is like I just average out average the lines, right? So you could have like you could have something like this. Different traders they draw lines differently. Right? So but sell around here. Okay, bearish descending triangle down. Sounds technical. Another one. Okay, another one. Okay, another one. So okay, this one is a long one. The longer it consolidates, okay, General Electric, yeah, pretty bearish stock. The longer it consolidates or constrain in liquid, the stronger the breakout. That's what most people say, or the guru says. All right, rising pen and a downtrend. Common now your eyes are trained for this. So DTE Energy. Okay, this is a utility company. Mm, well, yeah, it did work out. Then here, okay, then it's false bottom. This is where people are buying. Okay, then it goes up. Pretty short-lived. When was this? 2019. Okay, not exactly a bearish period. Okay, bearish rectangle, the short one, right? But nevertheless, bearish. Bearish rectangle in downtrend. Okay, there you have it. More examples. I'm just showing you these examples so that of course there's more right in the chart. You have this one. Okay, no, this is one, and a small one over here. Size, yeah, size differences. Okay, well, this one a little bit out of shape, but nevertheless, it's also bearish flag. I didn't name this right here. But if you want to see, sometimes after bearish flag, you can see something like this. It's forming another one right here before it continues to go down. Because it's Nokia. Okay. Nokia. Well, Apple's up, Nokia's bye bye. When it goes out. Okay, a lot of people know about Nokia story, right? So, not gonna talk a lot about it. Right. So, okay, athlete. So, okay, all these are just it's in my Microsoft PowerPoint, and it's just a collection. Oh, this is like now it's not very definable right here, but I'll just call it diamond in the downtrend continuation. It just breaks up and then suddenly gaps down and continues to go down. I think the structural changes in the business probably didn't really work out well. Not very nice pattern this one. Okay, not a nice one. And you can see that okay, it looks like a diamond downtrend continuation, but selling it, right here. Those weeks rejection up there, long rejection, strong flush up, strong rejection is what I'm looking for. Same as here. Bam. Okay. Descending scallop in the downtrend. Sounds very tasty, right? So this is not common. These are very rare. Maybe 1% of time you see this. Less than 1%. Okay, so want to wish you a good Merry Christmas, great Christmas, and a happy trading and investing. Striker X here signing out. If you like this video, please hit the subscribe and like button, and also notification button if you like to get more of these videos. And we also have a Facebook group where we're trading, and we will provide the link below in the description column.